Hi, welcome to this course. If you're completely new to trading, you are in the right place. My name is Ryan Ifere, market analyst and internal educator here at Valetax. Welcome to the entry-level trading course. We're going to be starting with the episode 1 of what is Forex and what trading really is and what it's not. What is Forex? Forex simply means the foreign exchange. It is a global marketplace where currencies are exchanged, and anytime money changes from one currency to another, Forex is involved. As we can see here, I have simply stated that it is the global market where currencies are exchanged and trillions of dollars are traded daily. And key participants in this foreign exchange world are the banks, institution, businesses, and traders, retail traders such as you and I who already have an interest to want to participate in foreign exchange markets. And one major future attribute about this is that trades happen electronically 24 hours a day. Now, when you think about Forex, the first thing that comes to your mind usually would be, how does this really operate? So I'll make it easy and clear for you. When you trade Forex, you're not buying a company or a stock as it is popularly stated out, but what you're really doing is you're buying one currency and selling another currency at the same time. And it would interest you also to know that the foreign exchange world is the largest financial market in the world, bigger than stocks, crypto, and everything combined. As a matter of fact, we would like to sometimes say that the foreign exchange world comprises of everything assets being tradable. The next question you have in mind is, why does Forex exist? So Forex exists because of international trade, travel and tourism, investments, and hedging. Forex exists because countries and businesses need to exchange money. So how does trading work? Forex trading is buying one currency and selling another. Currencies are traded in pairs such as Euro USD and GBP USD, where one currency strengthens and the other weakens. But price moves based on economic strength, demand, and sentiment. When we talk about Forex in the digital term, we're not just talking about buying money as opposed in the physical term, but we're trading the relative values between the exchange prices of one currency against another. Now, talking about the logic, I would first want to explain to you how it works in the physical world and then how it's applied digitally. So take, for instance, if a Nigerian company wants to buy goods from the US, they need dollars to buy those goods. So what then happens? They would then need to exchange their currency for the US dollars in order to be able to pay the United States. Similarly, if someone is traveling, if someone travels to the UK and they want to buy something from the United Kingdom, they would need to spend in the domestic currency of that place, which is British pounds. So they would need to exchange their naira for the British pounds, or they would need to exchange their dollars for the British pounds. Although the dollar is widely accepted, it is still possible to want to spend in pounds. Now, that is a typical example of the physical foreign exchange. When it comes to the digital term, we trade in relative transactional value of the change in currency of transactions happening in the digital space by institutions, banks, hedge funds, and even countries exchanging their currencies via their central banks. And that is really how the logic behind trading these currencies work. So what we are trading as Forex traders is the relative value in what we refer to as the pips change. We'll get to that in just a minute. Why do people trade Forex? People trade Forex for accessibility for retail traders, high liquidity and smooth price movement, and the ability to trade both rising and falling markets, and most importantly, an opportunity to grow capital over time. So one of the major reasons why people come into the foreign exchange market, why people trade Forex, is number one, a place to invest their capital in, depending on the type of growth they want. Because the foreign exchange market gives you liberty to explore different investment opportunities, to either be a day trader or to be a swing trader or to be a position trader. At the end of the day, it is all about fully understanding the dynamics of the market and betting against it and investing your money into the foreign exchange market. It is higher in liquidity, unlike stocks, where you have to wait for a longer period of time in order for you to see your gains and your rewards. But when it comes to trading Forex, you can see your rewards and your profits and gains in a shorter period of time. It also is an opportunity for people to have a day job by investing and trading in the foreign exchange market. And last but not the least, like I stated, an opportunity to grow capital over time by a compounding series of growth. Opportunity exists, but risk is always present in the foreign exchange market. For a market that is widely traded and heavily traded with a lot of liquidity from lots of institutions and businesses and banks and countries, it is definitely fueled by risk. So, as much as opportunity is available, it is also good to keep in mind that risk is always present. What trading really is. Now, this slide and this segment is to debunk the false ideas that has been sold to a lot of people about trading. And I made it very simple for you to understand. Managing risks before thinking about profit, making decision under uncertainty, following rules, not emotions, treating trading like a business. That is what trading really is. Trading isn't just about charts and numbers and just trading randomly, but it's about first understanding that risk is always present. So therefore, you need to manage risk in a market that is chaotic. Chaotic in the sense that everybody is looking for the best pricing and is willing to buy and sell. So with so much liquidity and high volume, there's a requirement for you as a retail trader to always manage your risk before thinking about profit. You need to also understand that it's going to take a toll on you psychologically because you're going to have to be making decisions under uncertainties. You'd have to create rules and follow your rules, not emotions. And because the market is high liquidity, moving and volume and volatile, there are always going to be a rush of emotions, having to see profits and having to see losses. So there are always going to be emotions, but what keeps you apart is following rules. And you need to now treat trading like a business. Trading isn't a game and it's not for fun. It's a business and it's a venture to where people grow capital or even stand chances of losing capital. And just like every business, businesses don't become profitable overnight. They become profitable due to structure. And that is what trading requires of you. Trading is not prediction, it is management. And here is a reality check for you to always keep in mind and have a reset of your expectations. Most beginners give up on trading and they fail because they try to rush profits, they try to trade emotionally, they ignore the idea that they need to manage their risk. They forget that risk is highly involved in a high volatile and liquid market. They underestimate the learning curve. So it is important that you go slow and fully learn so you know what you're doing exactly. And that is why this course has been curated for you as a beginner. If you're still watching, please feel free and don't forget to like, subscribe on the YouTube to follow for the more course and watch the remaining of the courses in this playlist. So don't trade emotionally. There are times where your emotions are going to be high, and that's completely understandable because the human mind would always try to process what is happening. So when losses come, it's all part of it. As long as you manage your risk, you wouldn't be blowing up your accounts. Never forget to ignore risks. And there's a core principle for us here at Valetax. Survive first, improve second, and profile last, which means that you need to manage your risk, you need to learn properly and get better at your technical skills and fundamentals. Then you then begin to gain the rewards that you've always wanted, and you can finally see your growth fully. So thank you so much. Thank you so much for watching thus far. I'll see you on the next episode. And my name is Ryan Ifere, market analyst and educator for Valetax. See you on the next episode.